Good morning, YouTube. Good morning. This is Signet with the Bullish Bears. It is 1/8/2020. We've got Boeing all over the place. We had a market meltdown and recovery, and it's just another day in the marketplace. So good morning, good morning. I have already posted a short float into the trade room. So if you are already a member of the Bullish Bears, you'll be able to go over there, come into the trade room and pick up the short float list. There's only 10 stocks on it. They have a range between 20% all the way up into the 50s, and I got it from FinViz. Now, if you don't understand the whys and the reasons for trading a short float, you could take some of our courses and classes and get a better grip on why we focus on things with a high short float and looking for a short float squeeze. I will be streaming today until around 11 o'clock. Got a lot of things going on, so probably won't hang out late. There were a few earnings products, and we do have Bed Bath & Beyond tonight.
Order filled.
Which will also be quite nice. It should be a good play. Now, I was looking at the volatility run on that. I'm not too impressed, so don't know that I'm going to put an iron condor on it or not. Good morning, Richard. Remember that Apple is SPY and SPY is Apple, right? Unless there's an absolute reason for Apple to diverge, Apple is the market is Apple. Sometimes futures move products, sometimes products move the futures. Unless this has a reason to not continue to go up, I anticipate that it's going to continue to go up. One way that you can do a week-to-week projection is to use your Fibonacci line. So you bring out the Fibonacci retracements, tag the last time that it had went to 50, and that gives you a near-term time frame. You can see the green line is my target. That'd be 305. That's a nice near-term time frame. There is no secret Ouija board process for figuring out how far it's going to go this Friday. There was some weakness. It consolidated on this previous pivot point. It started to work its way back above the 50. And then, like I said, unless there's a darn good reason, we should anticipate that it's going to continue to go up. Unless the entire market goes down, and then that's going to bring Apple down. Because Apple is the market, and the market is Apple. If you don't quite understand what that means, go look at where Apple is. It's in the Dow, it's in the Russell, it's in the NASDAQ, and it's in the S&P, and it's one of the largest cap companies out there. And if you overlay Apple with SPY, you'll see that they're sisters. They move in sync until they don't, until there's a reason for them not to. Any thoughts on CEI? Yeah, it started to validate that 320. I like that. When it had first made its run, we were all asking the question, will it hold? And it needed to validate the range. If you look back at this previous one, it made a run and it couldn't hold. It just faded back down and rested on the 200. Again, it took a pop and it just came right on back down again. This time finding a home on the 50. But this time it made that run up and it found support right around that $3 range. This is a good deal. That means we actually could be getting a change in what everybody believes this thing is worth. But we don't know, and you could go do some digging, how this is connected to that big gas pocket that they just found, right? Is this company got rigs connected to that? Does it have anything? It's the APA news if you wanted to go read about Apache drilling and see how it is connected with that one. I personally don't know, but a little bit of homework would go a long ways. On the day, I'll be looking to play this thing. It's definitely got some really nice ATR at the moment, some nice range. Offer us a trade opportunity or two. I like that it has found this support. What I need to see at the bell is gap and go. I want to see this fill the gap. That would be the first thing, because it hasn't gapped too far. So the first thing we would anticipate is that it does fill that gap. Two ways to look at it. If it doesn't fill the gap, then we're most likely not looking at a range-bound market today. So instead of focusing on the gap and go, we would be looking at the open range breakout. There's our 4 trade patterns that we want to focus on. It's easier if you name them so that you can develop all the systems and strategies that go with them. The gap and go, that is at the bell trading. The open range within the first 30 minutes of trading. From the open range, you get range-bound markets, which will give you channel trading, or you get breakout markets, which gives you flag-based trading. That would be your continuations and reversals. So at the moment, we need to see this close the gap and then break out of its open range. All right, everybody, you got to give me just a moment. I need to begin streaming in the live stream room. Good morning, everybody. Let me get a sound check. Yay, it worked the first time. So we're just looking at CEI. It seems to have found some correlation with Apache. I don't know if you all want to do a little bit of homework on that and see if there is correlation. I ran a FinViz scan. Here are the 10. I did post that in the room. If you scroll up or scroll down or scroll around somewhere, you should find it. These are short float, high short float products. I believe my scan is set to be over 20%. We had a wild night and not really sure what to anticipate this morning. Normally, I do my pre-market global events, world economics, all that good stuff. But right now, we have a market mixed with fear and greed, and there's absolutely no telling what we're going to get after that retaliation airstrike last night at the base. So, I don't know. I would recognize that there are a couple of defensive stocks that should be worth playing. And then there are some gold and your precious metals maybe could be worth playing today. And I mean, that's a good place to start. We do got the oil report coming in today, which should be worth playing on USO. So any of those could give you some volatility, right? And that's what we're absolutely looking for in the market, is some volatility to play. We had a person talking in the chat room this morning about a strangle. So what they had done, strangle straddles, is if you go out and you buy and you sell options from the same strike, it gets this, I don't want to use the word collar in the sense of a trade, it gets this collar around the market. And what you're looking for is the market to move away from your position. You buy a call, you sell a call. Now, if you don't use the same strikes, then you get to form a base at the bottom, and this forms more of a bowl or a U shape rather than a V. But if you use the call and the put with the same strikes, it forms this V here, and you need price to immediately move the hell away from your strikes or to slowly, generally, finally move away before your expiry. As time goes by, this purple line will start to fade until you are at the bottom of the blue line. It's a time frame to this. The president will be speaking today. I don't know when. We can check the president's schedule on Discord. I'm sure there's other ways to do it as well, but I'm interested in doing things the easy way. And we can just use the command !president to ask the bot what the president's schedule is. He's got talks with reporters, and then he's going to deliver remarks at 11:15, and then he gets his briefing at 2:15 or 11 and 2:15. So that way. Now we know what the president's going to be doing today. You can also do that with calendar to find out what kind of economic events we're going to have. Thinkorswim also has calendar in it, and I recommend going to your broker. If you trade futures or if you trade SPY, the Qs, IWM, then it's just like you're trading the futures, and you should have a really good idea of what happened with global markets. Did they have a GDP report today? Did they have an oil report today? Do they have central bankers doing anything today? What they do will affect us also. It gives you a good heads up. So your broker will give you that kind of economic data for free instead of having to go out and pay for some firm giving you this economic data. So we got the EIA at 10:30, and then bond and auction notes at 1. Thank you, Creed. That's absolutely right. FX Street is free. They do also have an economic calendar. I like to look at upgrades and downgrades and analyst targets and analyst recommendations. And so I like to go to my broker for that. Now, I've got multiple brokers. One of my brokers is Fidelity. I don't trade with Fidelity. I don't care to use their trading tools, but they've got a really nice customer-based web platform that does really good with analyst upgrades and downgrades. And you can compare sectors, compare industries, relative strength, and then you got your economic calendar. They do a really good job over there. It's free. You open an account, just don't put any money in it. Hey, why not? So, any other markets that we want to look at this morning before the bell? We are below 10. We are 10 minutes to the bell. Oh, look at that. So, off exchanges don't have to report immediately, and a lot of times they'll hold their volume until later on and then they'll report it. And oftentimes you'll see something like this on a Friday. The market makers, if they're obligated to take your trade, and so suppose you buy some calls, they will go out and protect themselves by buying a bunch of shares. At the end of the week, they don't need the shares anymore. They'll do a market at close, and they'll sell back their shares because they don't no longer need it because your options have expired, and you'll see these kind of candles on a Friday close. It's a little surprising to see one in the morning here like that. Aha, thank you, Gordon. I don't do very much TA on Trade but good to know that we can extend the lines there. So we had a question about the gap when it comes to gap and goes. The time frame that you should be looking at is immediate. At the bell, you would anticipate that a market closes the gap. And here's a really great example. SPY closed here. It ran up through the overnight hours. At the bell, it tried to close the gap. Now, it didn't. It didn't close the gap. It found support, but it was immediate. It immediately started working to close the gap. SPY is a very liquid product. It's got a lot of attention. It doesn't surprise me that it couldn't close the gap. And if the gap is too big, it's just too big. It's not going to. You're going to have to build a trade strategy for how you want to trade a gap. Which kind of gap you're looking for, a large gap, a small gap. A large gap more often than not won't be filled, right? So it really, and then it depends on what kind of market. If you're dealing with some crap penny stock, or if you're dealing with, an economic giant, that matters too. Since SPY is a collection of products, it's a basket of products. It kind of changes the rules on what it does and how it does it. ETFs are something that you should recognize as a different entity than Apple and Google and Amazon and Facebook. SPY is a man-made product. It's not an algorithm product. People have a committee. They sit around and they decide how much Facebook shares are going to be in this thing and how much Amazon is going to be in there. And then they have to adjust that every 2 weeks, every month, every 3 months, whatever the committee decides, that's when they're going to change it. So it's not a perfect representation of this of the S&P. You would be better with the XSP, which is an algorithm synced perfect tool that accurately identifies the S&P. This is the micro version of the SPX. And again, here we had a gap in the overnight hours. The gap was large enough it didn't try to fill. Gap, it didn't try to fill. Gap, this one tried to fill, didn't make it. You will not be able to build an entire gap and go strategy from a 5 minute talk in a live stream. You're going to have to go and dial down and put out some effort to develop a trading plan to work with these. And these can be used in pairs or all together as a group, depending on the way the market works through the morning. It doesn't have to start with a gap and go to have an open range. Once you've got the open range defined, you will either stay inside of it and channel trade all day, or you will break out of it and look to be trading some kind of continuation pattern. I like the flag for my continuation pattern, but it's not always a flag. Gap up list on Thinkorswim, not as good as what we can get from Trade Ideas and other places, but it is a gap up list. Tesla has been a beast, an absolute beast. If you haven't gone over and taken a look at that, a back ratio trade might be a really good idea for anybody looking at Apple and Tesla and anything else that's a runaway freight train right now. The way that that works is you put on a back ratio options trade, and if the market continues to run higher, you get paid. If the market dumps, then you get a little bit of your credit, so you pay your commissions and you make a little bit of money. We'll just call that scratch. And the only way that you're at risk or that you're going to lose money is if the market just stays exactly where it's at. Now, when you've got something that's been a runaway freight train, say for the last week, 2 weeks, 3 weeks, a month, it's more than likely not going to stay put. It's either going to dump back down or continue to run. So a back ratio or a ladder trade is a really good way to do business. Because you can also add another trade to that and put on an iron condor really cheap or a butterfly really cheap. Butterflies are really, really cheap products. So you could throw on a back ratio with a separate butterfly, and that butterfly would be a throwaway, right? You spend $10 so that if the market does sit there, you hit a 300% target profit on your butterfly and help cover your risk in the back ratio. Putting together more than one options trade to hedge yourself is a good way to do business. It's an interesting morning. We really just don't have what I would normally have, which would be a full grip on what to anticipate at the bell. I like to have a game theory, what to anticipate. How did the overseas markets do? What was the news like? What we should anticipate this morning, and we can't lean on any of that since we're going to be dealing with extreme fear and volatility. I did remake that drill that we had talked about yesterday, people. The trading drill for the futures and for options. It's not a strategy. It's a trading drill to teach you all kinds of lessons that I don't want to. I don't want to bias your expectations. I would rather that you go try to do the drill. So after the market gets into the lunchtime lull, perhaps give some thought into going and taking a look at the video, learn how to do the cut and reverse drill, and give it a go. An hour or two a day of that for a week will absolutely give you experience and skills that you never thought possible. Absolutely right, Rose. The charts tell us everything. If we can just get our own personal bias and feelings out of the way, the charts give it to us straight. The video is in my Discord. You should find it under Brokers Jigsaw, because Jigsaw is a broker. All right, we got green on the screen. The gap up list, DXF is the biggest one on the list. I'm not playing with that thing. Macy's got a lot of volatility this morning. Good stuff. Riot is one that I've traded quite a bit. I like it. I've done it before. X Steel is a favorite of mine. X Steel and USO are smaller markets with actually decent day tradable options. When it comes to day trading, we got to have things that fit our account. And those two are fun to play without a lot of risk. Two words that I really like: low risk. SNE is a good one I've traded multiple times. Oh, let's see what we got. All right, USO is all over the place. This went from highs to lows and is working its way back to where it closed yesterday. Don't forget, we do have an oil report today. You can see that X Steel has been stair-stepping down. This is the kind of Fibonacci retracement that I love to point out, because these stair steps are perfect. They're exactly what we teach. A market makes a move, pulls back to structure, makes a move, pulls back to structure, makes a move, pulls back to structure. Each structure that it pulled back to told you exactly where it was going to be, where you could anticipate some sort of market reaction. Again and again and again. Way better than any indicator looking at the candles. No indicator in the world could do as good as you can do with reading the chart. Don't forget that those indicators are training wheels. So when you look out at your children's bicycle and it's this tiny little thing with wheels on it because they can't figure out how to ride the bike without tipping over, that's you every time you put the RSI and the stochastics and the MACD on your chart. Loading it up with training wheels because you can't read price. Is that a bad thing? No, it is not a bad thing. We all need a hand till we get good at learning something or doing something or practicing something. We have to learn from something. Some of us have a busy life and don't want to learn it. We just want the indicator to do the work for us. It's not a bad thing. Cambridge Energy did pull back down to the support. We'll just steal this line. That price structure right around the mid 330s. Now we'll put it on a 50 line bounce on the 15 minute. We'll see if it can find some support there. Instead of looking at these areas of support and resistance with a line, try to recognize them as an area of a zone. It's a buying zone. It's where we would expect buyers to step in, take the market back up. Drawing a line more often than not will cause you fear, because you'll see a market get to your line and go right past it, and you'll think, oh no, it didn't find support, and then you bail out of a trade or you don't take a trade just to find a little lower or a little higher. It actually did hit that zone and do what you had anticipated it was going to do all along. Take a quick peek at the market. One of the things that I like to do when I'm trading and not streaming is I keep an eye on the money flow inside the marketplace. I set up my 4 grid so I can see all 4 markets, and then I watch the money flow. Now, this might look a little confusing if you've never come over here before. It's 100 markets. These issues are how many of the markets are going up and how many are going down. What we want to look for is divergence. If I have 70 markets going up and 30 going down, I should have a lot more money coming in than going out. Right now, we don't have that. The money flow is almost identical, and you'll see, 1 or 2 points difference between them. This is nothing. So we've got some divergence here. Now, what I like to see is something like a 60 going down, 30 going up, and a lot of money coming into the market. That's one of those really bullish reversals that I start looking for on the market, and it gives us some really great trade opportunities. SPY, the Qs, IWM, the Dow. It's a really great morning setup. We just don't have one today. That's too bad. You can detach these and set all 4 of them. This is the S&P 100. You can also go to the NASDAQ 100, the Dow 30, and then unfortunately the Russell, the lowest it has is a 1,000. But you bring up all 4 of those one at a time, and then you just shrink them down. Once you detach them, you can see we can make it really small. You shrink them down, and you pin them so that they stay on top. And you just need to see the money. This we could set to the NASDAQ. And set it right there. And then you would continue to do that until you have all 4. And so then you're watching the marketplace and you're seeing the money flow. Now, after the first 30 to 40 minutes, it loses its muster. You're not going to get much value out of it. Say by 10, 10:30 at the latest, you're done. But getting that early morning bounce when you're trying to find the low, you're looking for the reversal on the day. If you've identified a strong bullish divergence, that's a great setup opportunity. It's one of those times also where we're looking for a market to fill the gap from the overnight hours. But we pretty much filled it. We had the dump last night, and we had already came back and filled the gap. I would anticipate a pretty much range-bound market today unless we get some news from the president or from one of our economic events that changes things around. I really don't expect oil to wobble the market today, but I do expect the president to go chipping his teeth, and so at that point, we don't know what to anticipate. We don't know what he's going to say. We don't know how the world is going to react to what he has to say. And we got a watch list starting to populate. Seems like Walgreens is trying to find its bottom. Now, I had thought about putting on a trade for Walgreens, but if you look at the implied volatility, and that's how I trade earnings. Out of all the markets that have earnings, most of them report, get a little bit of volatility, and then they equalize back to the mean. So putting on an iron condor makes a really great trade strategy. What we want to avoid is things that look like this, massive gaps. We want to see something that moved around and then came back inside its regular price range. We also want to find things that have a history of vol crush. So it has a report, it gets crushed in volatility, crush, crush, crush. The ramp up to earnings and then a nice clean dump, ramp, dump, ramp, dump. And we didn't have that, so I didn't take it. Had a question on Yuma. Take a look at that one this morning. So this gapped, came back down to close the gap and looks to be taking a run for it. It's up 7% today. Definitely offering us something to play with. So you can see that it moved in the overnight, came back down, found support at the previous pivot point, and it's struggling with the 50. That 50 is only a 5-minute 50, so, we can recognize that it's there and that there was a little bit of reaction to it, but it was more than likely a reaction to this previous pivot and this previous pivot here. Okay, quit. And not the 50. So it hit some overhead resistance. It needs to validate the strength of the move. This isn't the first day. You can see we look back. We've had multiple days in a row. The energy markets, it's not just Yuma. It's not just Apache. It's not just ASC. A lot of these energy markets are all looking the same, right? And it makes sense. We've got all this Middle East uncertainty, oil, energy. Apache just found this huge pocket of reserve that they can go after. So all of that has to come into play.
Order filled. Order filled.
Recognize when you're looking at anything, Yuma, ASC, try to find its peers. Don't just stare at the product you're trading. That leaves you blind. ZN is another one. Very volatile, but look at what's going on in the energy. It's doing exactly what the last chart was doing, Yuma, ASC. We could probably go look at Halliburton and Neighbors and all of the rest too. Yep, if you check the news on Apache, you can see that they had found some big pocket. It's somewhere in here. Big oil reserve found. Now, I don't know what all companies connect with Apache. I don't know who they're affiliated with. I worked in the oil field for most of my life, but I was on drilling rigs. I was not on the production side. I punched the holes. I didn't bother getting anything out of the ground. Rig is another one that is not matching its peers. Look left, identify this is a pivot point. It may find some support here. At the very least, give a pullback before continuing lower. I would not necessarily anticipate this moving too much lower. But there's your pivot. And if we continue to look left, it's an identified area of previous resistance, now hopefully support. So don't just stare at one chart. Here's NOV, another oil. Find one in your price range, find one with some relative strength, and I'm not talking about the RSI. Try to identify a trade opportunity. Which one is divergent from the rest? Why is it divergent? What did it do or not do that the others did? And does that offer you an opportunity? If it is moving in sync, find 4 or 5 that are in sync and look for one of them to bird dog. Find the one that is leading the pack, that has more immediate investors or trade opportunities than the rest. Trade Logic 101. That goes for the chip sector, the weed sector, healthcare. Me, I like finance. So credit cards, banks, lending institutions, digital lending like Paycom, Paycor, PayPal. But then you can get into like the credit cards, American Express, Discover, Master, Visa. You can get into the trading firms like Schwab and Goldman Sachs, JP Morgan. Anything would be better than just staring at one chart, completely blind to what is going on in the industry or in the sector that you're looking to trade. Even if you can only find an ETF product like XLF for finance or XLK for tech. Micron Technology is down almost a 0.5% today. Now, if you're trading intra-week, the 15-minute, the 30-minute, the 2-hour charts, those are your best friend. Trying to find something that's trending on a daily chart that won't stall on you with a Friday expiration option can get tricky. But if you're looking to trade Friday expiration options, look at a smaller time frame, like a 2-hour chart. Identify your trending markets on that time frame. Look for a pullback. You'll get a lot more trade opportunities. You can set alerts for those so you don't have to sit around all day staring at the chart waiting for something to happen. Trade small, trade often. Absolutely right. All right, real quick, need to take a peek at the market, see where we're at. To identify trade opportunities on the day, I like to take a look at the sectors and see what is helping out the market, what's hurting the market. You know, if we're rallying and moving, what sectors are causing the rally or the move? If we're stalled and not moving, what sectors are holding us back? So out of all the shenanigans last night, you can see that the Russell looks completely different than everything else. Now, we were talking yesterday about the market and its divergence. Normally, these futures markets move in sync, and then that offers you trade opportunities. And really, we haven't had a lot of market sync. This indicator up here is showing that we are in sync right now, and that we've only had one 5-minute candle that was out of sync on the morning. Even so, they're not synced in their patterns. The bonds are pressing against the low of the pivot. Weakness in the bonds will take pressure off of the financials. Taking pressure off the financials gives it more room to run. Tech is flat, so we need tech to come in. We need industrials to come in. Man, we need building materials to get up off the bench. We need this participation in the other sectors to get some movement in the marketplace. Otherwise, we're going to stay range bound, dragging our feet. The Nasdaq is only up 30 on the day, the S&P up 10, the Dow up 32. Got to be careful with the Dow because of Walgreens. Walgreens can tip the market over. If you don't remember earlier in 2018, Walgreens had this issue back here, and then it had that bad earnings. And the Dow YM was down 500 points on the day while the S&P and the Nasdaq and the Russell continued to rip through the day to the upside. That was a very divergent day in the marketplace. But it did offer trade opportunities. That's the kind of stuff that we want to identify and find some value in. Get trade logic and trade ideas. Creed called out a halt on NEWA, which has been unhalted. It triggered the circuit breaker. Not much to that one. And halted again. If you're ever in doubt, bring up your time and sales. You can see that it's not moving or halted. In level 2, you can see we're halted. Costco pressing the top of its boundaries. Nice clean price action this morning. Step that out into the larger time frame. Yeah, let's get rid of that. We got the overhead 200 to worry about. Turn on the linear regression. Recognize that we're not quite overextended as you would have thought at first glance. Yes, we're above the regression, but not overly. I would look for this to run into some serious resistance at that roundy, the 293. So if you're looking for a reversal play on the day, setting up a trade in Costco to reverse the 293 would be a good opportunity. Now, if I remember right, this is $2.50 wide strikes, so that kind of, it definitely has to be taken into consideration. When you jump in front of price, you can get some really good value in your options because you're going against the grain. That's not a good number. That's not a good number either. Yeah. I'd let it get a little more aggressive. We had a shout out in PayPal. It's up 1.25 on the day. Pressing right into the pivot point when we look left. So there's your resistance. Step out into the larger time frame. Let's get rid of this mess. Use the linear regression from its last earnings and lowest point. There you can see that it's not doing too bad. The breakout opportunity would be to get out of this engulfing candle. We're dealing with an inside day stuck inside of this range. If we kind of step back a little bit more, recognize that we're in a box and we're breaking out of the box. Think of lanes on the interstate. This was an agreed upon value for this market. Tried to break out, failed, tried, failed, tried, failed, trying again. Persistence beats resistance. The S&P breaking structure to the upside. We had a double top with a breakout. Reviewing Apple is like reviewing SPY. Reviewing SPY is like reviewing the Qs. Reviewing the Qs is like reviewing IWM in the Dow. So if you want to know what's going on with Apple, go look at the Dow, go look at Apple, go look at SPY. Unless Apple has news that pulled it away from the market, and then you look at Apple. Otherwise, looking at Apple is looking at everything. Roku forming this wedge, resting on this base, failed to break the 50. Now, we talked about this yesterday, failing to break the 50 in the daylight. More often than not, if it's an aggressive market, it'll jump over that 50 in the dark because the resistance isn't there. This wasn't aggressive enough, wasn't aggressive at all, apparently, because the next day it dumped. Now, it's still got the support down here, but that support's a long ways down. In the near term, I would be looking for the 135 to offer me something. Something, anything to stop this from dumping. Come on, Thinkorswim. Wakey, wakey. You can see that is where the market found support. Not to the penny, but pretty darn close. It's what we do when we look at a market moving towards a round number. We anticipate that it's going to find some support. Round numbers, quarters, 50-cent pieces. So we've got a leg down. It's building a base. This might be its bottom, and we could be looking for a reversal on the day, but we don't have that yet. If we also look left, we can see this pivot point in the Globex, the after hours, whichever you want to call it, widen it out to a larger time frame. This price range here did the same thing at the same spot. So you can see that that 135 area is a recognized, validated range. Price respects that area, and it reacts every time it gets there. Really nice heads up. So you're looking for it to make or break. Right now, it's trying to make. It's trying to hold it. The idea that it found that area in the overnight and it also held there, impressive. That's a real solid line. So for a trade opportunity, we've got 2 minutes before your 30-minute open range would be defined. You've got your high on the day. You've now got your low of the day. And now you'll either be channel trading or trading a breakout. It's a perfect setup. Everything you need is there. Where do I get in? Where do I put my stop? What could I anticipate out of the market today? If this doesn't hold at the 135, you can see where did it find previous support. Aitawe, right around that 133. Quick shout out on a penny stock, ABIO. Then I'll come back to that other list that you had, ABIO. Well, what an amazing, perfect picture of crap that nobody wants to trade. So this set a new range. It broke that 62 that it couldn't manage to get through back here. and it didn't hold again. Although if we turn on the linear regression, you can see that this is slowly trying to build these higher lows. It's trying. If we look at it from Tom Busby's point of view, we've got a defined range with multiple failures out of the range. So it broke out, couldn't hold, came back down to its previous support. Broke out, couldn't hold, came back down to its previous support. And here we are again. Broke out. It might hold. So far, it's not. Nice clean spike, and now it's just fading back. What news did they have? What catalyst kicked this into gear? What's in the pipelines? We can check that. Because the bot on Discord makes it very easy. You just type in pipelines, type in the words that you're looking for. Chronic heart failure phase 3 trial to be initiated in the first quarter of 2020, subject to financing. There you go. You can also use Thinkorswim and pull up live news. Looks like ARCA, I don't know how they are connected with ABIO, but there you go. 6.2, major area of resistance. Right now, the only thing that you could anticipate in this is that it goes back down to where it was. So a good trade opportunity to go short, unless it's going to validate that move up. And to validate it, it would need to hold support right around that $6 range. It tested it once. You can see the wick. All right, so what else we had? We had Roku, Amazon, and Apple. Now, I am in an Amazon trade. When I'm in a trade and I'm going to be reviewing a product, it is appropriate for me to tell you I'm in a trade. So I am in a credit spread with this. My credit spread is way below the market, and as long as it stays above my anchor, I'm getting paid. This is one of those that is still above my anchor. I'm going to get paid if it doesn't come back down into this range. Averaging down is something you want to be very careful with, Brazil. You don't want to do it lightly, and you should do it with a plan. When we talk about trading candle patterns a lot, hopefully your eyes were drawn to this. Picture perfect. Compress, 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 explosion. That's beautiful. Absolutely love it. U.S. stock futures open positive. Yeah, that's no surprise. Poland central bank keeps key rates unchanged at record lows. U.S. private sector job growth exceeded estimates from December. That's the only news I got popping up on that screen. So what do we do with Amazon? Let's step out into a larger time frame and recognize what it's doing right now. It's it's getting hung up. Now, depending on your time frame, if you're like me, you're already in a trade because it came down and it pulled a Busby. And I just call it that because it's where I really had it hammered home in my mind. I still hear Lucian telling me that price closes the gap, right? It's just, I still hear Creed telling me to journal my trades, okay? So I hear Busby every time I see a market that did this, range bound, range bound, range bound. It breaks out, comes back down, and validates the range. It didn't just validate the range, it found support on the 200. From there, it's made its move. Now, what I would have liked to have seen was that it came up, it came back down to validate the range, and then it broke out. Well, we didn't necessarily get that. So this is an unfulfilled pattern. What we didn't get was this continuation on. And instead, we're dealing with an inside market. Now, I'm a big fan of inside days. I love them. They demonstrate a lot of market compression. That energy, I hunt for it and then trade, and I enjoy it. But when the engulfing candle is too big, you lose a lot of your potential energy. So this massive candle here isn't impressive to me at all. The idea that we're stuck inside of this candle gets my attention. Now, I'm already in this trade, so I don't need another one. But if we can get this day to stay inside the day and maybe begin the next day inside this day, really dial up the pressure on that. This one should be on your list to look for a trade opportunity. Long or short, it's not going to sit here in this compression for long. If we're lucky, we'll get one more day out of this compression before we really start to see that break. Use your alerts so that you don't have to waste time staring at the chart all day. If you look left, you can see that this is a high level area. It's highly trafficked. It is a zone, and it's going to be hard to break through that. With all the positive news about Amazon, the idea that it can break through this, absolutely. What else do we got? Triple D. Here we are again with a compressed market. And we also have, it's called a fallen angel, and I've had a hard time finding that. I think the guy that I heard it from maybe named it on its own. And I've said this often, name your trade so that when you're journaling them and you're trying to keep track of what works and what doesn't, you have a separation between a channel breakout on a 5-minute and a channel breakout on a 30-minute, because those are two completely different trades, right? And if you name your trades, it makes them so much easier. So maybe the guy called it the fallen angel because it was his name for it. I don't know. What the fallen angel is that you have a continued trend and then you get this fallout. Or if it's the other direction, it would be that pop out. Okay, from that, you get the recovery and then you get a breakout. So it's a lot like the cup and handle, but it would normally be on a market, say, that's trending down like this, and you would get the fallout and then a break from that. So you're looking for something that's in a channel and breaks the bottom of the channel and then it recovers and breaks. This isn't quite there, but it's what got my attention. That cup and handle, it's a failed cup, right? This is the handle. We would be looking for the move out of it, and it didn't materialize. Take all that away and just go back to our normal draw the box. This brings everything into focus. Broke out, failed. Tested, failed. Broke out, failed. Broke out. Away. This is where we're at now. It failed to even get up to the $10. It failed to even get up to this previous high. But, and important to say that, but it did break above this pivot here, the 9.5. And that's important to recognize. That needs to hold now above that 9.5. So it's given it back. It's a little bit of concern. If this fails the 9.5, I'd be looking for it to come back to the box. That's a 50-cent move. You got some opportunity here. Notice the 50 that we were talking about. This couldn't get past the 50 yesterday, but the traders were aggressive enough that in the overnight hours, it jumped the 50 when nobody was looking. That shows increased, continued interest in this product. Pipeline company failed its breakout, but it's sitting on the 15, or excuse me, it's sitting on the 50 on the 15. If the strength is there, we could get a trade opportunity in PAA today. It does have weeklies, so we do got some opportunities there. This is a low ATR product. You're not going to expect this thing to run to the moon. It has a little bit of market participation, but it's a bit shallow. You could still find some trades. I think you'd be able to get in and out of this thing. Be careful of the bid-ask spread, though. Look at this 20-cent difference. The bid-ask spread is tied directly to the amount of liquidity that's in this product. More often than not, I don't even have open interest showing on my chain because if I have to ask if it's liquid enough, it's not. It's not liquid enough if I have to ask. I don't even need to look. More often than not, if it's got a wide bid-ask spread, it's illiquid, and I don't want to trade it. Signet Jewelers pressing the top of its range. This is a really great example of when I say a trader needs to find a way to trust their analysis. This has been setting perfect trade opportunities. And you might look at this and say, yeah, but as soon as I trade it, it's going to quit doing this. Maybe. But trust your analysis. You can recognize the highs, you can recognize the lows. You can see that we're extended beyond the linear regression. It got rejected at the 19, lower highs, lower lows. You can see where we're headed with that. Would it fail? Could it fail? Yes, absolutely it could. Trust your analysis. Have a reason to pull the trigger. Pull the trigger. ADBE, Adobe Systems. A breakout opportunity. If we're looking for a Busby on this, right, then we don't yet have the reversal. We can throw on the Fibonacci, identify the next leg up. You're looking at a February 21 credit spread. This just had earnings, so you don't have any problem there. 310, 305. Let's just clean this mess up for a minute and look at this. You're talking about putting a credit spread on down here. This is important to recognize that when we build a credit spread, we want to put barriers between us and price so that if we're wrong and it doesn't continue to go up or to continue to go down, whichever direction we're wanting to play, that it will hit those barriers along the way and price will help us, previous price will help us stay successful. This gray box is where your trade would be. right there. And you're wanting to check if this is a good trade. You've got multiple layers between you and price. You're looking at February 21 with no earnings between now and then, unless it has out of sync earnings, which it doesn't appear to. So the question at this point is, why wouldn't you put on this trade? What delta did you use? And did you use delta at all? Did you just use price? Where are you going to get out of this trade at? Are you going to take more than one of them? Feb 21, 310, 305. It's a $5 wide trade and you're getting 50 cents for it. That should make you pause. Can it be a successful trade? Yes. Yes, it can. But that's not very much credit to risk $450 on. This thing can move $21 between now and February 21. It's at 335. We'll just do some easy rounding. So that's $35. Uh, you're right on the edge of what it could move. The delta selection looks like a 15. So if you didn't know, that's what it is. It's right there. That's not a very high credit. Does it fit your criteria to take a trade? Now, I can't throw stones. I took a $2.50 wide trade in Amazon yesterday and I got $22 for it. Is that a good trade? No, it's not. It's not a trade I would want to do every day of the week because that's not a really good credit. Am I going to make profit in that one? Most likely because I'm way out of the money. I'm okay with it once in a while, but I don't build a trade strategy around it because it's a bad way to do business. So, what is your reason for getting into this trade? This isn't a good trade. It can be profitable this time, it can be profitable next time. When one of these trades lose, it's going to be an overnight gapper and it is going to wipe out your entire $450. It's not if, it's when. If you continue to trade like this, sooner or later you're going to get one that gaps on you overnight and it will wipe you out. So that needs to be a part of your uh, decision making process. This is a really low IV rank because it had earnings and then it got crushed. Like I said, can it be profitable? Well, hell, you're building it way down here. You're 20 something dollars away from the market. And you've got a lot of things between you and price that could help you out. This one trade, I don't see why you wouldn't put it on. But I would definitely rethink your trade strategy and not do this on every single trade that you put on, or you're going to wipe your account out. There are some really great videos if you type in "hold my beer" on YouTube. Ah, that's some good stuff. Go one of these days, go look for a drunk squirrel. Look at that video. There was a fermented pumpkin that a squirrel got into, and it got drunk. Oh man, it got drunk, and somebody got it on video, and it's It's not funny, I guess, to make fun of the squirrel, but oh my goodness, it's funny. All right, YouTube, I'm going to let you all go. Make sure that you stop by the Bullish Bears and sign up for a 14-day trial. It is not only a trading community that has a live stream where we talk about trades and we sometimes jump into the trades live and we analyze the market, but we also have a lot of educational content. You can search for years worth of material in the blogs, and I personally have put in a lot of time and effort to create videos in the Next Level Training Library. In the members only section, there is the Next Level Library and there is an options tab. And in that options tab is the content that I created. And these aren't videos that are like this is a call and this is a put. I saved that basic options education for somebody else to do. The websites are full of that stuff everywhere you go. You go in here and you look at a covered call video. This is a video on how to put on a covered call strategy. What to avoid, what to do, when to roll, what strikes, what expiry, why, when, how. Out of the money credit spreads. There's a lot of ways to do an out of the money credit spread. This is the gold standard used around the world debit spread and credit spread strategies. Trading firms aren't just in America, they're in Asia, they're in Europe, they're everywhere. And these videos are going to show you an exact strategy. What delta, why you're using that delta, what expiration, how to manage the trade. Legging into iron condors when they're a cheaper product like, say, AMD, and you want to get in with a $5 wide iron condor, but you don't want to put in too much risk. My version of the Greeks. I know when I was trying to learn the Greeks, that bank speak just confused me. It didn't help me out, it just made things worse. So after I learned options, I went through and I developed my own videos on the Greeks, putting it in plain English where everybody can understand it, and then putting in there how we actually can use it to make money or to avoid getting into a trap. And then, of course, a couple of my own trade strategies. The PPS is something that I developed for a Friday expiration trades for people who have to work for a living. This is a trade strategy that works when you go to your lunch hour and you can find your trades, put them on for Friday, or in maybe your first hour break or your end of the day break. I'm not the only one who throws videos in here. Tim has his portfolio in here. So when he updates his trade portfolios, he makes videos on it. He has an uncanny ability of finding products before they break out, long-term swing trades. So for you people who work for a living, you want to find a trade and you want to get in it for 6 weeks or 2 months, Tim's your man. And he has got a years and years worth of proven trade logic because his portfolio is open for everybody to see. Dan's done videos and Creed's done videos. We've got scanners and we've got indicators and products and trade ideas and you name it, it's in here. Years of experience. So come by and check it out. 14-day trial will get you access to our room. Only a subscription will get you access to the Next Level Training Library.